This is Eat, Sleep, Invest, the marketing podcast for real estate investors to get more deals.
Okay, that's pretty solid too, because I talk to a lot of investors, especially the guys getting into the business, and I'm usually telling them, hey, just go find the deal. You'll figure out what to do with it when you get the deal. But then when you get the deal, then you go into panic mode because you just promised somebody that you're buying a property and closing in 30 days, right? Or whatever the time is.
Yeah. Yeah, man, that's one of my pet peeves. So I respectfully disagree with you because I hear a lot of people, especially the gurus, saying, hey, just find a good deal. The money will magically find you. And BS is what I say to that, unless you've already got a group of potential investors already lined up, kind of waiting in the rings, ready to jump onto your next deal. So if I could wave the magic wand for all of your listeners, it would be, hey, let's line up the investors. Let's line up the joint venture partners. Let's get that capital lined up first. And then you go make offers on deals. Because, Brian, you know this. If you know you got the money taken care of, you can run in there. You can make, unconditional offers. You can close on deals a lot faster. You can negotiate harder because you know that you've got the money back to back you up. So, yeah, that whole find the deal, the money will find you, that bit me in the ass. Forgive the language. I hope we're allowed to use the occasional
you're good.
Bad word there. That bit me in the ass big time years ago when I was first starting this, because like a lot of people, I started off self-financing my deals. So usually most people can do their first deal or two. If they're like you and they're doing the burrs, yeah, you can recycle that money. But it really does, if you're using just your own cash, it really limits the scalability of your business unless you've got super deep pockets. So I did my first two deals, ran out of cash, ran out of credit. And of course, that's when the perfect opportunity landed in my lap. And I got the property under contract. At that time, I was doing single family homes and kind of a lease option kind of a program. So I had my tenant buyer all lined up. They'd give me a nice big fat non-refundable option fee. They'd given notice where they're living. I got the property tied up. The seller, I had 2 weeks traditional type idea to come up with financing. And then it was like, oh crap, now what do I do? Now I got to scramble to find this money. So that was around the time I think that movie, The Wolf of Wall Street, was out. Do you remember that? And Leonardo DiCaprio and Jonah Hill and all those guys made it look like so much fun calling people up and selling them stuff, dialing for dollars, cold calling people. So I said, hey, I'll try that. Call, reject, rejection. Couldn't handle that much rejection. I'm too much of a sensitive soul for that. So I quit cold calling. But that had burned up a couple of days, putzing around with that. Then I remembered somebody else had given me the advice. They said, hey, if you need to raise capital quickly for a deal, go out and talk to people, right? Go turn every conversation into a real estate conversation and get some investors that way. So, okay, I'll try that. I ran out to the local B&I, Chamber of Commerce, Toastmaster, wherever the hell they'd let me in the room with my 30-second elevator pitch. And basically all I got there, Brian, was a bunch of strange looks, a bunch of people kind of avoiding me and talking to other folks, and zero capital, which makes sense. I mean, I wasn't trying to raise a hell of a lot. I think it was 85 grand or something like that. But why on earth would a complete stranger lend you money? They don't know you. They don't like you. They certainly don't trust you with their money. You're starting from scratch there. So I was running out of time. I can remember this vividly, and even though it was a long time ago. I had 3 days to go before I had to come up with the money. And I was sweating. And I came up with a brilliant idea. I said, hey, if enough people see this deal, because I structured it all out so it was quite attractive for an investor. If just get enough eyeballs on this deal, it's going to sell itself. So I did one smart thing out of this whole experience. I did one smart thing, Brian, and that is I put together a target list of prospective investors. So just kind of like you guys do, you laser focus on one area for finding motivated leads. I decided I'm going to laser focus on my existing connections for prospective investors. I only needed one. So I put together a list of a couple of hundred people. That was smart. But then I spammed them all with my deal. I put together a little PDF and I emailed that out to everybody. I remember that was on Wednesday. Thursday morning comes up and I get up and I'm so excited because I got some replies to this email. Thank God I finally finally something worked. The cold calling didn't work. The schmoozing didn't work. This internet marketing thing with email is going to work for me. Until I started reading the responses, and they pretty much all said something like this. Hey, Dave, dude, I haven't heard from you in quite a while. One guy hadn't heard from me in 18 years, Brian. And this was the first thing that showed up was, hey, it's Dave. I got a great deal. Have you got 85 grand? Bottom line, they all told me to take a hike, and that deal collapsed. I ticked off the property seller, my realtor, their realtor, home inspector. My tenant buyer had already given notice where they were renting. It was a pretty tight market at that time. Had to give them back their, I think it was 15 grand or whatever they gave me as an option fee. It was a mess. And I live in a fairly small town, so I had some pretty serious egg on my face. But you want to know the worst thing out of that whole experience?
What's that?
Is because I was so clumsy about it, because I just charged in like a desperate bull in a china shop, I turned off a lot of really good potential investors. And, you know, when you burn those bridges, it's hard to mend that again because like they say about a first impression, right? So that was the worst thing about that whole experience. And when the smoke cleared and I finished licking my wounds and pouting, I said, there's got to be a better way. So I knew a thing or two about marketing. So I came up with a process which worked really well for me, which was, hey, let's get the money lined up first. Let's do some consistent communication. The one smart thing I did was I created that target group of potential investors, but instead of just pitching them deals, let's edutain them a little bit about what we're up to with real estate investing. And ideally, instead of waiting until I got a deal on the go and then calling people up, why don't I get meetings booked with these folks, get them engaged, get them signed on to do a deal with me before I've got that next deal lined up? And it works so much better, especially if we create curiosity with the marketing like you guys do, right? You put out the marketing, you get people to click on that, they put up their hand, they're showing the interest, they're coming to you instead of us chasing after them. So we apply that same process for raising capital.
Yeah, and that makes sense. I thought you were going to have a happy ending at that story.
No, it is a happy ending. It is. In that I learned from my stupid mistake, and I help a lot of other people avoid making those same stupid mistakes.
I was waiting for you to tell me everyone told you to go pound salt except for one person, and you did the deal.
No, that one person even told me to go pound salt.
Okay, and you know what? So this is interesting. So I talk to a lot of investors, and I think a lot of the guys starting out too, when they're looking at finding money, they're picturing something other than the real people that are going to give them money. Like what? So you built that list. What types of people were you putting on that list?
Yeah, good point. So I know the best way to start when it comes to private money is your existing network, right? Leverage the people that you know. So friends, family members, co-workers, business associates. If you're self-employed, it could be clients or customers, people you know from church or civic organizations. Like I go to Rotary. So that could be if you're part of a sporting team, if you go to play Little League or slow pitch or whatever. People that you know and who know you. You've got that pre-existing relationship. That's where we want to focus first, in my opinion, Brian, for a couple of reasons. Number one is just logic. Like if we're just getting started with raising capital, a lot of people are out to lunch and they think, hey, I'm just going to go find an accredited investor and they're going to fund everything for me and I never have to worry about it again.